All right. Hello, everybody. Happy Tuesday, and welcome back to the Weekly Rebalance. We're going to go through our normal market update, get into some research, and cover what's going on in the Middle East. How's it going, Nick?
Doing well. How about you?
Doing pretty well. Can't complain. I'd be happier if the stock market was up today, but it's not.
It's just an opportunity to buy. Just got to throw it in.
That's right. That's right. Well, let's get into the market update because it's been a wild ride the last couple of days after the experience over the weekend with the attacks on Iran from
Yep.
the US and Israel. Been a wild start to the day, and it's been characterized the first 2 days of this week by big volatility downward swing in the first part of the morning, and then at least a modest rebound. I mean, even though these numbers on the screen here don't look so good, they were much worse earlier in the day.
Yeah, they certainly were. And especially yesterday, that was a notable turnaround we saw.
Yeah, absolutely. The S&P, let's pull that up and see what it was yesterday. But big swing intraday, and big swing intraday is today as well.
Yeah. I think we closed almost unchanged on the S&P yesterday.
I think we did.
But, if we were looking at what futures were doing before the market opened, the S&P futures right before the open were down 1.1%. So that's
Yeah.
a pretty notable swing back up.
Yeah, a very big swing back up. So if you got your cash in quick enough.
Yeah, you gotta get it in, man. Except, maybe not yesterday because it came down again. But
Yeah, absolutely. Well, here's the last 3 days of charts, really focusing on these the last two trading days since the news, and big swing there, big
Yep.
swing there from the top to the bottom. Today being the biggest downward swing, and then yeah, like you said, since about what is that, 10 o'clock this morning, 10:30 this morning, been actually going up, and we've rebounded, and are now still negative for the day, but it's been a bit better afternoon than the morning. Same thing yesterday too. Big drop off in the morning and then a climb throughout the day. It's just markets are, in my opinion, they're just trying to digest what's going on, and it's obviously a difficult thing to do, but lots of information coming for the markets to think through.
Definitely. Definitely. And it's really easy to forget too. We had Nvidia earnings last week. That was going to be one of our big topics this week, talking
Yeah,
about the reaction to Nvidia earnings, which also an interesting story. Beat on earnings, had a poor end of the week, uh, but has been overshadowed by what we had happen this weekend.
yeah, forgotten almost with what happened over the weekend. So.
Yep.
Well, I mean, the big news is still, if you look at the S&P, I mean, here are the numbers. So let's just go through the numbers. The Dow is positive just under 1% now year to date. The S&P is down almost 0.5%. The Nasdaq's down 3% for the year. And then the green on the screen is mostly international markets. The other things that are doing well this year are your more value indices in the US, your dividend paying indices in the US. Those are still positive, but they've seen volatility this week just as much as the other indices that are not value oriented as well.
They certainly have. And I mean, even over the past couple of days, really has been interesting to watch. Dividend aristocrats having a more negative day today than the S&P, at least last I checked. So potentially that's turned around. But past couple of days here have definitely been interesting.
Yeah.
I think, yesterday seeing three sectors were positive: energy, industrials, and technology, or IT. Industrials makes sense. That was the one everyone was expecting. Defense stocks being in that category for the most part. Energy makes sense. Tech, though, kind of having a surprising rally yesterday.
Yeah. Well, some of that makes sense if the big shock here is the oil prices, right? So
Yeah,
the Strait of Hormuz, I'm probably saying that incorrectly. I'm sure somebody can correct me on that, but that's how it sounds to me. That's how it looks to me. Is is constricted now. 20% of the world's oil flow goes through that strait, and oil prices spiked. Good for energy companies, right?
yep,
And bad for a lot of other sectors, right? But tech is a little bit more immune to that than some of the other sectors in the economy, at least I would
Yeah,
say. So some of that actually makes sense, where they were a little bit, less affected yesterday.
definitely. Definitely. I think the more surprising thing was, we were expecting a very broad risk off mentality, and
Mm.
typically just buying tech would be more of a risk on move. So that was a little bit surprising. And then today, I mean, gold fell a decent amount today. So I thought that was another interesting thing to note. Yesterday we saw it rise a good amount, kind of as we would expect. But today, it, for the most part, we saw a risk off sentiment, but we didn't quite see the rotation into risk off assets. We didn't see a rotation into gold. We didn't see, you know, treasuries. Now that one makes sense that we saw yields climb higher in a lot of respects, but relatively a risk off move. Didn't quite see that play out. Oil prices rose for sure, but didn't necessarily see anyone piling into gold today like we saw yesterday.
Yeah, absolutely. That's true. Look at gold today, 4% down, big sell-off there, which
Yep.
is pretty interesting. The the rise in oil prices has been muted in the afternoon, but still up almost 4%. And the other interesting one is Bitcoin. Bitcoin not doing terribly, actually holding up okay. Still down 1.5%, but for a typically considered to be risky asset that has a higher beta than stocks, not so much today.
Yep.
So the other thing is, looking back at the year now, looking at the sectors, energy materials, consumer staples still staying at the top. And, that I think, getting into some of the research that we did this week, and some of the conversation we wanted to have around the conflict in Iran and former conflicts as well, the likelihood is that this is a fairly short-lived market event. And as long as this stays regional and doesn't expand beyond that, it's a blip on the radar. However, if it does get extended, you're really looking at at the end of the day, you would expect energy companies to still do well. The US is fairly isolated from some of the major risk to oil price shocks, which is
Yep.
why I think you've seen Europe and Japan, some of the other developed markets and emerging markets struggle more than the US the last couple of days. But it'll affect us. But at the end of the day, it's a little transfer, a little wealth transfer from the consumer to producers of energy. But at the end of the day, the US is more isolated than the rest of the world, which is why we're seeing when we looked at that world equities index screen, you're seeing the rest of the world sell off here more. And from my perspective, it's because they have a much higher exposure to oil that's coming out of the Middle East than the United States. The United States is actually a net exporter of oil now, which does make a difference in situations like this.
Certainly. Yeah. And I mean, think about it, China getting a lot of their oil from both Iran and Venezuela. A lot of this, is causing a larger issue for countries like them as opposed to the US, that, like you mentioned, is a net exporter of oil and natural gas as well, which I know natural gas is one of the things that's caught up in the Strait of Hormuz as well. So definitely securing some of that oil from Venezuela has helped lighten the blow on this and increasing drilling again. So potentially that was something that was done in preparation for a move like this, but it certainly has insulated the U.S. further than what we've seen in the past, like the oil embargo in the 70s.
Yes, yeah, absolutely. So yeah, let's get into the research of the week then. Let's discuss market impact. How would you summarize, if somebody was asking you what should I be concerned about here? Should I be concerned? Should I adjust portfolio strategy, I or should I not? How would you describe that, Nick?
Yeah, so I think there's a lot of pieces to discuss with that. But for the most part, especially when we're dealing with something like the attack on Iran, and the subsequent volatility from that, we've already had the event happen. It's already priced in. Um, we're not really going to avoid anything by changing are positioning now. Now, you might experience some volatility. You may have already experienced some volatility, but usually staying the course, like that chart you had up earlier, that's a great chart. I think every major portfolio house produces a article like that anytime like something like this happens. But we've had several events like this, some even more widespread, more particularly involving the U.S. as well throughout time, and staying invested has been the answer.
Yeah.
So I tend to advocate for staying the course.
Yeah, absolutely. This is a really nice one from First Trust produced this, just covering all these events. If you just look at everything that's involved here, and you can read through these, but $10,000 in 1970 has become $3.5 million over, the 55 years that this is invested here. So it just makes it, and all of these things happen. Now, everybody knows that, or at least they should, right? I think it's easy to think this time is going to be different, or because it's a war, that's different than something else. But in reality, that's not necessarily true. And I really liked this chart right here, which covers all these different geopolitical shocks that are similar in a lot of ways to what's going on right now in Iran. And at the end of the day, look, I mean, check this out. There's oftentimes a drawdown, right? The max drawdown being the Pearl Harbor attack in World War II or pre-World War II. But even in that year, the 1 year return was positive. And in fact, most of these cases, all but two, the 1 year return was positive. So it just goes to show you that a lot of times these market sell-offs related to a geopolitical shock is not something that's likely to be sustained. There's a repricing initially and then a recovery, and the market tends to move on. But the markets don't like uncertainty, and that's what they're trying to price in right now. And unless something extends further and more uncertainty comes into play, the markets do a really good job of pricing that in and moving on from it.
Yeah, certainly. And speaking of pricing things in, I've got an interesting chart I created last night. Let me
Yeah.
pull this up here. So I charted the VIX over the past 6 months, I believe,
Okay.
and went on ahead and superimposed events related to Iran, because the thing leading up to this attack is it wasn't necessarily unexpected. I think over the past couple of weeks, people have been kind of anticipating this sort of move. We've seen a lot of mention of potential military involvement in Iran, and we've also seen more and more military assets building up in the region. And basically, what I've found looking over the past few months is we've got these major events that are implying that military action in Iran is more likely. And each of these times we see the VIX subsequently increase by a notable amount. Now, there's other things going on here. We've had some other things happen over the past few months. But I think as these events have happened, and the president's been pretty vocal about where he stands with Iran and the potential actions that could come from their dealings together, I think because of that, the market has been increasingly pricing this in, and that's potentially why we saw a little bit of a turnaround yesterday, and maybe we didn't see quite as notable as a sell-off as we might have seen otherwise. This is something that's been telegraphed for a while, and the markets have been incrementally pricing this in, or at least it seems that way if you take a look at this. Uh, so I found that interesting. There were a few people talking about that yesterday as well on the news, just mentioning that this isn't necessarily something that's coming out of the blue. I mean, even I was talking with my phone on with my dad on the phone on Thursday or Friday, and he said, "Oh yeah, they're going to strike Iran this weekend." And so it wasn't necessarily you had to be in the know to know about this or think that this was going to happen. This is potentially something that's been priced into the market incrementally over the past few months.
Yeah. Yeah. The volatility was maybe expected, and a lot of it was priced in. Maybe not all of it, but some of it. Otherwise, you would have had a more volatile reaction. Is
Yep,
that basically what you're saying?
essentially, yeah.
Yeah. Yeah, that makes
Especially with
sense.
what we've seen. I mean, it's been pretty um, well telegraphed what's going on in that region, moving
Yeah.
U.S. assets over there.
Yeah. Yeah. Certainly has been. Interesting times, that's for sure.
Definitely.
Last thing I wanted to show you, Nick, was this. Let me share my screen again so you can see this. But I pulled up put this together today. Find it. Here's my number here. Um, I don't think this First Trust thing covered this. Yeah. Oh, maybe it did cover some of this. But I wanted to highlight these particular four here. Um, just, if you look at all these, just highlighting, getting back to what would you do in your portfolio strategy, right?
Mhm.
Would you adjust? If you take a look at this days to recovery, I think this is really telling. So even in these scenarios where we have great, some type of drawdown. So you got four events here: 9/11 attacks, Cuban Missile Crisis, Iraq invading Kuwait, and the Boston Marathon bombing. Right. So the 1 day return is notable, but it's just 1 day. The drawdown in each of these is something to pay attention to, right? I would say the Boston Marathon bombing is kind of a different type of event, but nonetheless, we can look at all of these, but especially honing in on these two more major events, the 9/11 attacks and the invasion of Kuwait. There's a notable more than 10% drawdown there. But in both cases, recovery was not long. 30 days to get back to where the market was before, even with the almost 12% sell-off um, in that period in September of 2001, and Iraq invading Kuwait, almost an 17.5% drawdown, and we're still recovered within that year. And it just illustrates that it's really not a good idea usually to adjust your portfolio strategy to accommodate a geopolitical event like this, especially like you mentioned, Nick, something that's unpredictable. And at this point, if we were to adjust today, it's already happened. The market does price those things in very quickly, and it's not usually a good idea to try to chase geopolitical events around and adjust your portfolio drastically after an event like that. You want to be diversified, you want to be prepared beforehand, and just expect that these things are going to happen. And usually they're fairly short lived, and the recovery comes back uh, reasonably quickly.
Yep. Yep. And it really comes back to having a strategy means you're prepared for things like this. Working with a good advisor, one of the key things is making sure that you're positioned in a portfolio or a strategy that you can withstand the volatility of it. So leading up to events like these, now maybe you didn't expect that it was an invasion or something like that, but events like these have happened throughout the past. That chart highlights plenty of them. Something is going to happen at some point. Being prepared and being in a strategy that fits your needs and matches your risk tolerance is really key. After that event happens, staying invested, staying the course is really your best option.
Yeah, absolutely. Perfect. I think that's the takeaway from the research of the week.
Would agree.
All right. Well, should we move into some trivia then? I've got some oil market and economic history questions for you.
Let's do it. There was one piece that I thought I might cover in the main part of the podcast, but it didn't really fit anywhere. So I might have three.
Okay, sounds good.
We'll see.
Why
We can
don't why
always
don't
just
you
talk
go
about the
first then?
last piece. I found it interesting.
Okay, sounds good. Why don't you go first then, Nick?
All right, let's do it. All right. Which commodity was once used as a unit of currency by Roman soldiers, giving rise to the word salary? I kept it commodity themed this week because we were
Commodity
talking
thing,
about
yeah.
oil.
What commodity? I mean, I want to say gold, but is that's not really a commodity. Silver?
I mean, it is a commodity. You're
Those are commodities.
sure they were paid in silver. This is like a little bit more another commodity. It's not necessarily a precious metal.
Not necessarily a precious metal.
I'd say it's not a precious metal.
What did you say?
It's not a precious metal.
Not a
that
precious
that was
metal.
deceiving the way that I said that.
Gotcha. Uh, Grain?
Not
Like
grain,
wheat,
so it was salt.
salt. Interesting.
Yep. So that's where we get the word salary from. But you also get phrases like worth his salt, things of that nature.
And that makes sense.
Very valuable, preserves meat, other things.
It's a good one. I like it.
That was a fun one.
All right. I like it. Yeah. All right. I've got one for you specifically on oil prices and economic impacts. You might have heard me talk about this on an earlier call today. So if you did, then
Oh
then
boy.
oh
Yeah.
well, we'll see. We'll test your memory.
Yeah.
What's the typical economic impact of a 10% increase in crude oil prices on inflation and GDP growth
Oh
in
yeah.
basis points?
Let's see. Was it? Mm, was it 0.3% on inflation and 0.6% on growth?
Yeah, you're right on inflation. So on average, a 10% increase in crude oil prices is about a 30 basis point rise in inflation and 15 basis point reduction in growth.
Okay. Yeah. All right. Couldn't remember that last part. I do remember the 30 bips this morning.
Yeah, that's a lot of the concern today is I think that people are trying to price in is what if prices are going to be higher?
Yeah, and that's an interesting one too, coming off of the most recent PPI rating that we got that came in hotter than expected, because that'll certainly push things higher.
Yeah, definitely. Speaking of, I got one more. I'm going to cheat and go ahead of you.
Okay, go for it.
Speaking of prices of particular items going higher, like fertilizer,
Okay.
what percentage of global fertilizer trade passes through the Strait of Hormuz?
Oh, hmm. Um,
Just an approximate number.
well, I wasn't going to give you an exact one.
Give me the exact number. Otherwise,
Well,
it
let's
doesn't
see. It's
count.
20% of oil trade, right?
That's right.
Um, I don't, I'll stick with 20%. We'll stick with 20%.
It's actually a little higher for fertilizer. 33%, about one third of global fertilizer trade goes through the strait, which is higher
That's
than I expected too.
That's interesting. And so, like fertilizer, I mean, I'm guessing we're talking about, you know, animal excrement, basically, for the most part. What
Probably.
country has a competitive advantage in producing animal excrement to the point where they export it? That's just an interesting thing to think about. 30, you said 33%.
Yeah, yeah. And is it a
That is a
country in that
wild thing.
region?
Wow. Okay.
Is it a
Yeah, I
country in
never
that
would.
region?
What's that?
Like, oh, do you know the answer?
No, I don't. I don't know. I'm
Oh,
just. I'm curious. Like, what country has that much of a competitive advantage in producing
I'm not
producing
sure.
excrement to export it at that degree? Wow. Okay.
I'm not sure, but one third, yeah, one third of global fertilizer trade passes through there, which is interesting. Could mean some,
I guess
higher
is it
price
coming
fertilizer.
in or going out? I mean, passing through it could come either way.
Yeah, I would guess it goes out, most of it going out, but I guess I don't know. Um,
Hmm. That's an
not a
interesting
lot of
one.
crops grown in that region with the more desert climate, so I'm guessing
That's
going
true.
out
That's
to
true.
the rest of the world.
Very true. Wow. Okay. Well, I would have never expected that one. That's a good one.
I didn't expect that one either.
All right. Okay. Here's another one. Metal was once considered more valuable than gold due to its rarity and industrial usefulness.
So, sorry, say that one more time. I lost you right at the beginning there.
Oh, no, no, all good. What metal was once considered more valuable than gold due to its rarity and industrial usefulness?
I'm gonna guess copper.
Copper's not a bad guess. That's probably what I would have thrown out. It was aluminum.
Huh, interesting.
Yeah,
Makes
aluminum
sense.
is very hard to separate.
Okay, that makes sense.
It wasn't until the late
Aluminum.
1800s.
And now we drink our sodas out of aluminum cans.
I know. Well, here's the crazy thing too. This is another fun fact I found when I was looking into this. Napoleon III, so when he would invite guests of honor over to his, palace or whatever, uh, the silverware utensils that he would use for these guests of honor would be made out of aluminum, and the
Huh,
more common guests he would use silver or gold
interesting.
because it was, impressive. Which crazy thing, I think that's true. As far as I can tell, that's true. So hopefully that's not something made up that I found, but interesting little.
Yeah, very interesting. I would have not guessed that.
Yep, pretty crazy. Well, I have one additional thing, and this is just a quick little note, because I think one of the things that we get from advisors following an attack like this or any sort of military action is the desire to add defense stocks into a portfolio. That's pretty common. Now, typically you see most of the action, most of the positive action for these stocks that wouldn't have been otherwise experienced right after the event. So by the time you get the money in there, you're already late. But basically that got me wondering what percentage of the S&P 500 market cap actually comes from defense stocks, and what's a good estimate of that? And so just as a quick way of breaking that down, because obviously defense falls within the industrial sector for the most part. Now there's other pieces to that, but for the most part, it falls in the industrial space. And so what I did was I took the ETF ITA, which is a common defense ETF, and I looked
Mhm.
for common positions within that ETF and the S&P 500, found the overlap and got the market cap from those stocks and compared that to the market cap of the overall S&P 500. And what
Okay.
I found was if you just take the full market cap of ITA, not the overlap, but just the full market cap of ITA, compare it to the S&P 500, 2.78% of the S&P 500 would be in defense stocks. Now, that's not exactly accurate because some of those names aren't in the S&P 500 yet. If you just take the ones that overlap with the S&P 500 holdings, only about 2.25% of the S&P 500 is in defense stocks. So just found that interesting. Usually you'll talk to an advisor following an event like this, and you'll tell them how much defense stock or how much defense business is within a portfolio, and they'll be surprised that the number is as low as it is. But if you compare it to the S&P 500, typically a lot of the portfolios have more than the S&P 500, just going off of that rough estimate.
Yeah. Well, and not all that much of the industrial sector is defense either. So
Oh,
the industrial sector is what, a little less than 10% of the S&P.
yep,
So you're talking about a quarter, maybe,
yeah, maybe,
of the industrial sector is actually in defense.
yep.
Interesting.
And now there's probably other names out there as well. I can't remember whether, Palantir having a defense tie-in. I can't remember whether that falls into the ITA or not.
Yeah.
I'm taking a look here at my research. Looks like they're not counting that. So this is like your GEs of the world, Lockheed Martin, General Dynamics, names like
Mhm.
that. So things that you typically more associate with just traditional defense stocks, but certainly not the amount that people would likely expect.
Yeah. Yeah. A little bit lower than I would have expected too. Good
Yep.
information though. Awesome. Well, any final closing thoughts for the week, Nick?
Now that's it for me.
Sounds good. That is it for me as well. So we can wrap it up and we'll be back same time, same place next week. Thanks, everybody.
Looking forward to it. Thanks, everyone.
Thanks, Nick.